Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 5th, 2022. Hope you're all doing well. In today's segment, we'll take a look at Snowflake, ticker symbol SNOW. As many of you know, all the big corporations are really struggling hard to make sense out of the data and to make business decisions based on the data. There is no easy way. That's where Snowflake comes in. With their data cloud, they can help the big organizations to make sense out of the data, look at the pattern, and clearly make decisions. That's where Snowflake comes in. It's a very competitive market, and this company is doing great. I've been talking to my software developer friends. They all love Snowflake because of its simplicity, and also you can connect to various data sources and get the data in a nice fashion. So with that, let's jump in and look at Snowflake and its competitors. All right, so we'll start with a quick look at the Snowflake and look at their background and what the company does. And let's look at the competitive landscape. I really love to look at the competitive landscape in the big data space because this space is really heating up and there is a lot of demand for big data and data scientists. And then let's look at the fundamentals of Snowflake and look at the annual numbers, quarterly numbers, and how they're doing. And finally, let's also do a technical analysis and see what the charts are saying. Is it gaining some momentum? Is it losing momentum? What's going on? And finally, let's conclude with a rating. Is it a buy, sell, or a hold? So with that, let's jump in and get started. All right, so let's look at the leadership team here. Leadership perspective, you got Mr. Frank Slootman. He's the chairman and executive officer or CEO. He's got a nice approval. Look at that approval rating, 95% approval rating. That tells you employees love this company. And also, I like when there is a co-founder at the helm. We got here Mr. Benioff. He's the co-founder. He's in charge of products, as you can see here. And this guy seems to be a very techie guy. A lot of background in Oracle, Google, and so on and so forth. I think he's the right guy trying to really, make sure Snowflake is at its top of its game. I think I love it when there is a co-founder involved and making sure company is doing well from a technology perspective. And look, Mr. Frank Slootman, he's the chairman and CEO of Snowflake, and he's got about 25 years experience. That's a good one here. And before this, he was the CEO of ServiceNow, and under his leadership, ServiceNow has done great. As you can see here, it went from $100 million to $1.48 billion, and he also took this company through the IPO. So this CEO Frank Slootman, he knows how the game is played, and he can really lead this company very well. And before that, he was in EMC, and I think he did well in EMC also. So with that, both the CEO checks out. He's the seasoned CEO, as we call it. And we got here Mr. Benioff. He's a data scientist, and he has got the tech savviness that's required in this cutting edge data platform. All right, now let's jump in here and look at Snowflake, see what they're up to. Look, Snowflake is into multiple areas. They're into data engineering, data lake, data warehouse, data science, applications, and data sharing. So they got this nice Snowflake here, or a data cloud. It can provide various services. In the past, to get some decision out of the data, you got to crunch the data. That takes a couple of days. You got some data warehouse systems. You have to extract. It's a painful process. Finally, the moment you get the data, it's already stale. Those days are no longer there. Now with Snowflake Cloud, you can make sense out of the data pretty quickly, and you can basically do all these things. You can look at the pattern, you can share the data, and so on and so forth. That's one of the reasons I love Snowflake, and this company is gaining traction with the Fortune 500 and big customers. All right, let's jump in here. And from a company highlight perspective, look, they got a $2.69 billion, $2.6 billion remaining performance obligations. So this tells you their backlog is pretty solid here. This much $2.6 billion is already committed. That's always good to see. There is a great remaining performance obligations. And look at that customer here, 6,300 plus customers, and that's also growing very nicely here. That's one of the reason I love this company. All these big customers, they love Snowflake, and I spoke to a lot of IT folks. They also love Snowflake. Software developers, engineers, they love Snowflake. And look, they got 1.8 billion daily queries. So folks are really loving this, and they're making queries to make sense out of the data. And they got 1 million plus customers. As you can see here, a lot of customers here. That's also good here. And they got 174% net revenue retention rate. This is a good number. Anytime net revenue retention rate is more than 100%, I like it. This is almost 174%. That's a great number here. All right, now let's jump in here and look at some more details. Look, customers are loving Snowflake. Ever expanding ecosystem. Look at the big players here. They are partnering very, very well with Microsoft Azure and Google Cloud, as you can see here, and a lot of great customers. Look at the financial space here. We got BlackRock, is the big financial company. We got FactSet, again a big company here, and you can see a lot of these great companies, including Salesforce, which is partnering with the Snowflake here. Look at the consulting companies like Accenture, Deloitte, all working with the Snowflake here. And you can see big companies, IBM here, and look at the amount of customers, and all these companies are working with Snowflake, and they're expanding the ecosystem of Snowflake here. All right, now let's go into a little more details. Look, from a financial highlight perspective, rapid growth rate here. I like the companies which are growing rapidly. 84% product revenue growth. That's a great number here. Net revenue retention, look, 174%. That's also great. Strong large customer momentum. I like it when large customers are growing. This tells you there's a nice momentum here with the customers with the 1 million plus product revenue. That's a great number here. And improving gross margin. These days it's hard to improve gross margin, but this company Snowflake is improving the gross margin. These are few reasons why I love this company, besides growing popularity of Snowflake among software developers and data scientists. All right, now let's jump in here. Look at Snowflake. Look, Snowflake price is about $129. Market cap is 41 billion. It's a big company, but look at the performance here. It's 67% off of its 52-week high, and it's also down 61% from for 1 year from a performance perspective. So this company Snowflake provides a data cloud-based data platform, and in multiple regions in United States as well as internationally. They have data cloud, which is their core offering here, and it enables customers to consolidate data and have a single source of truth for all their data and get some business insights very quickly. That's one of the reasons I love this company, and they also partner very well with other organizations. Look at the chart here. From a chart perspective, out of the chute after the IPO, stock went higher. Then it came down nicely. These are the, back in 2021, stock came down, but it did not stop there. It went higher. Right now, with all the stock rotation out of the growth names, look at the drop here. Nice drop here. At this point, I can see the stock consolidating nicely, maybe around say 125 or so, and then it can make its way higher. The reason I'm a little more excited about this stock is because it's got a ever expanding customer base, and also data scientists love this company. When there is a nice support from customers and software developers, the stock can go higher. And as you know, all the companies are becoming software companies. That's one of the reasons Snowflake can really thrive in this environment. And look, from a analyst expectation perspective, look, it's got 20 analysts saying buy. That's a nice number of analysts following here. 7 says hold and 1 says sell. That's why it's a moderate buy. I kind of agree with this, with this analyst recommendation here. It's a great moderate buy. This stock can bounce back and bounce back hard as economy improves slightly. And look, we got your analyst recommendation for Snowflake, and Snowflake really came down after the quarterly earnings, and it's really sold off pretty hard here. So that's one of the reasons I like it. I like it when great companies are sold off pretty hard and trying to make a small base here. As you can see, a nice consolidation pattern. Still early though, but you can see something brewing here from a consolidation perspective. After the stock dropped big time, look, we got 2 big drops here and a huge drop. Now it's trying to consolidate slowly. All right, now let's jump in here and look at Snowflake and the price targets. Look, Snowflake price is about $129, market cap 41 billion. And low target is 120. It's about $9 from the current stock price, but look at the high target, it's a 295. So from the current stock price, it's more than double, and the mid target is about 194. So I think it's a it tells you this stock can go higher, and the downside is just not too much here. That's one of the reasons I like it, besides growing popularity of Snowflake, and it's really growing very widely and quickly. From a technical perspective, it's a strong sell, as you can see here. After their quarterly earning, folks are a little bit afraid that the growth may be a little bit tapering down. That's why stock came down. The moment stock comes down pretty hard, technical perspective, it goes into strong sell. But fundamental perspective, look, it's still in the buy area. It's really a nice buy at this time. Analysts and fundamental folks are really liking this company, even though there is no positive profit margin yet. All right, now let's jump in here and look at the health score. From a health score perspective, this company is still an early stage company. Look, currently stock price is about 129. It's at its fair value right now. It's really at a fair value. Look, from a valuation perspective, valuation is still high. That's why it's 37, which is a low score for valuation. The quality and sentiment are below average at this time, mainly because stocks sold off here. From a Piotrowski F score, which indicates the financial books and how it is, it's above average. I think financially it's a good one. Nice improvement in the books. Altman Z-score, which is the industry standard for financial stability, is 15.5. Anytime it's over 1.8, it's a good one here. Financially, pretty solid company. And if you look at ratings versus peers, it's got pretty okay grade here. Look, right now, overall rating is low here. It's the early stage company, not making money yet. That's why overall rating is low here. But look, from a financial rating perspective, it gets above average. That's good here. From a valuation perspective, it's a little bit lower, but it's improving from a valuation perspective, mainly because stock came down big time here. Momentum is really very, very, very low here. After the earnings, stock came down. That's why momentum is low. So if you look at the average price here, look, stock price is about 129. The average price right now, average recommendation is about 195. That's about 50% from the current level. So to go to the mid price level here, it has to go 50% higher from current price. I think that's a good one here. Stock has a lot of room to grow here. And as you see here, there is a nice 5-year EPS growth, 295%, and a very good sales growth for next year, more than 50%. And it's got a nice buy rating from analysts here. That's a good one here. And look, from a sentiment, value, and quality score perspective, it's middle of the pack right now, and this stock can improve. Compared to the industry, though, it's doing pretty okay when it comes to sentiment. It's 43, higher than industry. And otherwise, it's kind of right now at this time here, it's slightly lagging behind the industry, even though I think I would bet growth perspective, it's growing more than industry. Right now, we don't have the data. And margin perspective, right now, it's negative because company is still in the early stage. It does not have the great profit margin yet. All right, now let's jump in here and look at Snowflake and the competitive landscape. Before you go into competitive landscape, one of the reasons I love this company, look at the total customer growth here. Nice clip here. They're growing their customer base very nicely, even up here. That's one of the reasons I like it. And more importantly, look at the customers with the over $1 million product revenue. That's also growing very nicely here. Look at that clip here. Large customer base is growing at 98% year-over-year growth. That's a great number here. That's one of the reasons I love this company, even though Wall Street does not see all the details. But company is really growing at the grassroots level and improving their customer base, especially customers with the product revenue more than $1 million. That's one of the reasons I love this company. All right, now let's look at the competitive landscape. This is where we look at the big data companies and see what's stacking higher and what we can buy here. Top of the list we got here the big dogs here, Google and Amazon. Look, they're doing very well. Strong buy rating at this time. And look, RSI perspective, middle of the road here. Probably Google is a good buy here. It's below 50. Amazon is going higher, and it's also has some stock split coming up. But look, we got Oracle here. Oracle is completely sold off. This is one of those companies. It goes higher after the earning at times. Right now, it's beaten down. It's a great buy. You could buy this great company here. And then you got here Mark Benioff's company, Salesforce.com. This company is also becoming a good one here. They got a lot of big data with the Tableau and Einstein Analytics and so on and so forth. This is a good company. Look at that EPS growth here. Nice EPS growth. You could buy this great company, announce the earnings, and they did very well. And we got here our company here, Snowflake. Look at Snowflake here. Look at that growth here. Nice growth when it comes to EPS growth as well as revenue growth here. And it's also a buy. I think it's a good one here. And we got a few more here. We got some of my favorite stocks like DataDog and MongoDB. Look, both are buy here, and both have got nice expectation from analysts for the next quarter, double-digit EPS growth as well as revenue growth. And then you got Palantir Technologies stock completely sold off, as many of you know here. It's got a hold rating, but look at that next year EPS growth and revenue growth, pretty solid here. And we got few more here. Look at few strong buys here. We got OTax, OpenText, and Elastic. Both are strong buys, as you can see here. Look, OpenText has got nice and high overall score. You could look at that one too. And we got few more here. Look, we got a strong buy Variant. This is the under the radar stock. Folks don't talk about this company enough, but it's a great one. Look at the overall performance in last 5 years. That's a good one here. You could buy this company also. And then you got few more here. Look, we got Domo here. Look at Domo here. It's big time down, but it's a strong buy from analysts right now. And same story with the Couchbase. It's just $15 stock. It's a strong buy and double-digit EPS growth and revenue growth for next quarter or next year. And if you're a conservative investor, keep watching the net margin here. You want to buy net margin positive companies, especially if you're a conservative investor. If you're an early stage investor and young at heart or young, you could buy stocks like Snowflake, which are still negative net margin, but there's a good promise for the future, and companies really expanding their customer base. All right, now let's jump in here and look at few more details. This is an eye chart. I will not talk about all the details here, but you can look at how the stock is performing in 1 day, 5 day, 10 day. in the shorter term. When the stock is down big time in the longer term, look at 1 year, 5 year, and stock is improving in the shorter term, that tells you the stock is getting its groove back. And if you look at Snowflake here, even though it dropped off big time here, but it's trying to make a base here. Right now it's still going down, as you can see here, but it's trying to make a base. On the other hand, if you look at few other names here, look, we got few names here trying to go higher, and we got stocks like Elastic as an example. Stock is trying to go higher, as you can see here. You could look at such names here, and also keep watch on the RSI. I love when the RSI is below 50. That's when I get interested to buy some of these names. That's the IV percentile. RSI is right here. And one of the reasons I like Snowflake is look at Snowflake's RSI, Relative Strength Index. It's 40. That tells you you could buy this company up here, and it's also nicely growing. And we got few more here. Confluent, it's a good company. You could buy Confluent here. Confluent is RSI low here, 44. And we got few more in the same category here. Teradata, AYX, and WK. WK is also one of my favorite companies. Look, it's a nice 294% in 5 year. Nice performance. And Variant, we talked about it already. So this tells you how the stock is doing in the near term, and you could take some advantage. And one of the reasons I put this chart is I know many of you love to do options trading. I put here IV percentile here for the options traders. Typically you can look at combination of RSI and IV percentile, and you could and even put call ratio, and you can devise some option strategies, which I always love. And for stocks like Snowflake here, look, it's middle of the road right now. It's IV percentile is 52. My favorite strategies are really I do multiple things with the options, as many of you know here. With Snowflake at this time, I would be buying a long-term call option and selling some short-term call options at a higher price. We call it poor man's covered call here. That works out very well here. You can buy long-term call option, maybe say 6 months to 1 year out call option below the current stock price at delta 70 or so, and then you can keep selling monthly, weekly options, or say bi-weekly, once in a 2-week type option at a higher price. That's the poor man covered call. So you don't need to worry about slightly higher IV percentile, because even though you're buying 6-month out call option, you're selling call options at a higher price on a weekly basis. That's the poor man's covered call. I like the strategy for Snowflake. And with stocks like Snowflake, in addition to poor man's covered call, I also sell some put options way below the current stock price, so that way it can finance my covered call a little bit. So that way this put option I sell say on a monthly basis, 30 days out, so that way I keep on generate some income that can compensate for my poor man's covered basically poor man's call option here. So that way poor man's covered call, so it will compensate and get some money to finance poor man's covered call. So that's how I play. That's one of the reasons I put here both RSI, IV percentile, as well as put call ratio. And also, as you look through here, keep a watch on the short ratio here. Look, we got one company here with high short ratio, which is C3AI. Look at C3AI here, high short ratio. This company is going through the short squeeze. As you can see here, stock is going higher, and right now RSI is 52. You could still buy, but I love it when it's a little bit lower, like after the earnings stock came down. That's the best time to buy this company. And we got Domo here. Look at Domo here. Domo also Domo is not too much here, just 5% short ratio. All right, that's how I play with the options, by looking at RSI, IV percentile, and put call ratio. And look, in some cases put call ratio is so high. Look at open text here. Open text, as you see here, it's got a nice and high put call ratio. That tells you folks are buying put options too much here. That's one of the reasons this can squeeze those put option sellers by going higher. We got same scenario in variant. Looks like folks are buying put options like no tomorrow. That's why it's high here. And Domo also same story. Look, folks are buying put options left and right. That's why Domo is very high PC ratio 602 here, and this also can squeeze those short sellers. All right, now let's jump in here and look at the spot the trends using exponential moving average. This is again eye chart. I will not go to the detail. The way to read this chart is you want to make sure the overall score is pretty good if you're a conservative investor, and you want to make sure the gross margin is also good, so that way you understand company is really doing well. And then you look at exponential moving average. We got here 5-day, 10-day, so on and so forth, all the way to 200-day exponential moving average. And by looking at this, you can understand pattern here. Look, we got companies that are improving right now. Look at Google here. Google is one of my favorite company. I keep buying this company whenever it falls down here, even though it's below its 200-day exponential moving average. But look at the shorter term here. It's improving and going above its 5-day, 10-day, 30-day, and 50-day moving average. It's turning the corner, as we call it here. It's trending up here. That's why you could buy this company. And same story with Amazon also. Even though it's below its 200-day exponential moving average, it's making some progress in the shorter term moving average, all the way to 50-day moving exponential moving average. That's how I kind of spot the trend here. And you got to improve, you got to invest and trade along the trend. On the other hand, we got few more here. Oracle, looks like Oracle is slightly stabilizing now, even though it's below its 200-day exponential moving average. In the 5-day exponential moving average, it's at the same price. That tells you this one is making a base. Look, 5-day exponential moving average 71.93. Current price, it's about 71.79. That tells you this stock is trying to make a base here. If you're an early investor, early trend spotter, you could buy Oracle at these levels. And typically this stock goes higher after the earnings. This one typically reports earning a little bit late. Maybe it's coming up in maybe in a week or 2 or 3. That's how I look at this chart to spot the trend here. Look, in the software and the data side, we got a lot of companies making some improvement here. And look, we got our company that we are talking about, Snowflake, right here. Snowflake right now, it's 200-day moving average perspective 46% down, but it's trying to make a base here. Right now it's 1% down below its 5-day moving average. 5-day moving average being 131 right now, and the current price is 129. I expect this to stabilize. That's one of the reasons I'm doing the poor man covered call on this one here and buying some long call options below the current stock price and selling some short call options above the current stock price in a smaller, in a shorter time frame. And we got a few more here. You could look at the these shorter term moving average and decide what you can buy based on the based on their trend. That's one of the reasons I love this chart. I just want to put it here so you can look at this one in detail. All right, now let's look here. Look at the Snowflake and snapshot. Look, from a snapshot perspective, Snowflake price is about 129 right now. And look, it's an analyst buy recommendation, as you can see here. RSI perspective, stock is sold off. A little bit higher IV percentile, but it came down after the earnings. On the performance perspective, look, it's getting clobbered in the near term as well as long term here. And look, from a sales perspective, nice respectable sales, $1.2 billion. And look, next year sales growth is very healthy, 53.79. And next year EPS growth is also pretty healthy. Look, it's a triple-digit EPS growth for next year. That's one of the reasons I love this company. Even though right now it's a negative net margin, which is 56% negative net margin, company is growing. I like it. They got a lot of cash. Look at that cash here, $3.8 billion. You don't need to worry, company is doing very well. And as you scan through, nice working capital here, $3.2 billion, no big deal. And they got nice free cash flow positive. Finally, that's also great here, free cash flow positive, $59 million free cash flow. And from a price to book perspective, not very expensive at this time here. And look, as you look through here, we got inside institution owning here. Insides are selling, but it's not a huge concern for me because it's a little bit early stage company. There will be those lockup expirations. Folks want to sell. At the same time, institutions are buying, which is a good story here. Short interest, not too much. Don't need to worry. And as you look through here, company is nice and solvent. It's a good solvency ratio here. And look, technical rating perspective, strong sell after it dropped off big time here. It's above its Bollinger lower band by 29%. That's also good. And 1 month low is 112. That tells you stock can come slightly down below the current price, but it's stabilizing right now. And look, from a volume perspective, I look at the volume very carefully. We got 1 day volume all the way to 90-day volume. Look, 1 day volume, stock is down big time, is lower than 10-day volume. That tells you when the stock is going down big time, volume is low. That's a good sign here. It's about 6 million shares traded. This volume is in thousands, so which is a lower volume when the stock is going lower. That's a good sign here. That tells you even the stock is going lower, folks are buying the stock. And then you got overall score here 22, which is low right now. It's an early stage company, and that's one of the reasons the overall score is low here. Look, Pietro CF score nice and high. Books are great. Altman Z score is high. Tells you financially it's a good company. Financial health is good. Growth grade is also good here. All right, now let's jump in here and look at Snowflake by numbers, annual numbers. Look, one of the reasons Wall Street does not like this company is look at this earnings per share. It's trending in the wrong direction. That's one of the reasons analysts and Wall Street does not like this company at present. That's why it went down. Look at the sales. Sales is growing nicely here. Nice clip. I love the sales growth or a revenue growth. Shares outstanding is pretty constant. Slight increase, not a big deal here. If the sales is growing like this exponentially, I'm okay with slight increase in the shares outstanding. Look, net operating margin is improving. Net margin is improving. Even though it's a negative right now, it's improving. That's what I look for. I look for the trend. And debt to equity is very low here, 0.04 as you can see here. But it's a pretty constant, so it's not a big deal at all. All right, now let's jump in here and look at the earnings history. From an earning history perspective, look, they missed on the EPS by 1 penny, and they did okay on the revenue side, and they're growing the revenue nicely here. And look, nice revenue uptick here. It was $159 million back in 2021. Right now it's 422, more than doubled, which is a great. And after the quarterly earnings, look, folks are a little bit worried, and analysts question the business model. But even then, stock ticked higher after the after the market, which is good. And stock came down big time here. Look, stock shares plunged in the after hours, and they missed by EPS, and they beat by revenue, as you can see here. The revenue growth looks impressive for this company, even though profitability is not there right now. So folks are a little bit in dual mind because they're growing their top line revenue nicely. Look at that 84% top line revenue growth, but profitability is not there right now, mainly because this company is investing in their own platform. They're not worried about the profitability, but right now Wall Street wants to look at the profitability also. That's why stock came down here. But call me a contrarian. I love this company mainly because they're expanding their customer base and gaining popularity amongst data scientists. All right, now let's look at Snowflake by quarterly numbers. Look, from a quarterly number perspective, this was the $87 billion market cap company a while ago. Cut in half right now, it's a $41 billion market cap company, and performance is big time down, as you can see here. And as you see here from a price perspective, same story. $275 back in January. Right now it's 129, cut in half, as you can see here. On the positive side, sales, top line sales is improving nicely here. Nice uptick here. That's a good sign. They're grabbing the customer base and growing nicely. Share dilution is not too much. This is slight dilution, but not a big deal at all. Nice sales growth here. I like the sales growth, 101%, and even in the recent quarter they grew their sales nicely. From an earnings per share perspective, look, company is not earning money. That's why Wall Street does not like this company. Still negative earnings, but look, there is some improvement in the earnings per share on a quarterly basis. Note this one does not include the latest quarter because it takes a few days for the data provider to crunch the number, but you can get the trend by looking at this. From a cash perspective, they're improving their cash, which is slightly down right now, but nice $3 billion cash. It's a good. Debt is very low here for a company of this size, which is checks out nicely. Free cash flow, there is improvement. Operating cash flow improvement. Gross margin, there's a nice improvement here. Net margin, it's improving, as you can see here. That's a good sign. And they're spending money on R&D, which is also great. I love it. So PE, price to sales ratio, it's improving, as you can see. It's still high, but it's improving. So that's one of the reasons I like it. Even though company is struggling on the profitability and improving, but they're growing their top line nicely and also improving their margins along the way. That's the way to really succeed in this business. All right, now let's look at the monthly average return. This is from one of my data provider, which is Stock Rover. I love this company. They have nice statistics and nice data. I think it's a good one. If you don't have Stock Rover, if you are planning to get one, nice buy and hold type stock research platform, Stock Rover is the way to go. Look, right now we got here Snowflake. From a seasonality perspective, generally up to May, it performs below the S&P 500, but June onwards, look, it outperforms S&P 500 nicely, and then finally in November or December it comes down. So that's one of the reasons. By looking at the seasonality, right now it's a good time to invest in Snowflake, mainly because it generally in a seasonality pattern it goes higher between June and November. That's one of the reasons I'm taking advantage of this big huge drop and buying Snowflake. This can be a great long-term play, or it could be a good swing trading play if you want to do that way, or if you want to do like me, buy poor man's covered call and keep selling call options at a higher price level shorter term, and keep selling put options at lower price short term. You could do that too. That'll make sure you're profitable nicely. All right, now let's jump in here and look at Snowflake. Look, Snowflake stock chart is it's a weekly chart, as you can see here. It's really came down big time here. And last candle, if you see here, it's trying to improve, too early to call. That's one of the reason I'm buying slowly here, especially call options and even the stock, and implementing strategies like poor man's call option or poor man's covered call, and also buying this for long term too in my long term accounts. All right, now if you look at Snowflake here, a 1.5 year chart here, look, IV percentile is still high. You could make some good money by selling put options below the current price. It typically comes down after the earnings. As you can see here, it came down after the earnings. And from a volume perspective, when the stock is coming down, volume is coming down, that tells you folks are really not selling the stock here. They're holding on to their stock. Sometimes as stock comes down, volume shoots higher, but that's not happening here. That tells you folks are really not selling their stocks. And look, from a DMI perspective, right now it's negative. Look, red line on top here, blue line on the bottom. Blue line wants to go higher, as you can see here, and red line slightly wants to come down. Even though it's a bearish, there is some sign of improvement here, because by looking at the curve of this blue line here, And look, smart money is flowing into the stock here. Smart money took advantage of this big drop here. They're buying the company. That's why taking money flow, which indicates smart money flow, that's going higher, which is a good sign here. Overall, I agree with the smart money here. I would be a buyer also. And look, checking volume average on the balance volume, also trying to improve here slightly. You can't see here, but there is a chance even on the balance volume can go higher. All right, now let's look at the option chain here. Look, current stock price 129, as you can see here, and look, all-time high is 405. That's a nice improvement from current price here. And if you look at 129, you can look at 130 right here. 130, look at 130 here. We got about 129 contracts traded, and even at a higher strike price here, look, we got one right here, 1000 contracts traded at 160. In the options market, folks are really buying call options all the way to 160, and look, one right here, it's 1820, highest contract traded on the call side at 230. Folks are taking advantage, buying some cheap out of the money call options, expecting the stock to go higher. And you could look at the open interest on the put side here, pretty consistent here, around 100-ish, which also indicates folks are also buying put options and hedging, their play. All right, now let's look at the put-call ratio. From a put-call ratio perspective, more put options traded than call option. That tells you folks are really hedging, especially because it's a high octane stock. That's why folks are buying put options. As the stock goes higher, these put option buyers can get clobbered. That's one of the reasons, if you're a long-term investor, you could take advantage, be a contrarian, and buy some Snowflake here. Granted, it might come down slightly, but long-term, it's a good play here. All right, now let's jump in here and do a quick conclusion. From a conclusion perspective, look, the product revenue grew nicely, 84% year over year. That's good. Remaining performance obligations grew nicely here, 82% to $2.6 billion. This is a great number here that tells you customers are really committing, for the future subscription, and Snowflake can get some business, based on previous purchase and commitments. That's a good number here. I'm more thrilled about, this company added 16 global 2,000 customers. It's really expanding, in between all this market turmoil. That's a great one here. And they closed $181 million. That's also a good one here. So company is really expanding. They're improving the free cash flow, and I think company is really doing well, even though it does not have positive profit yet. And look, they're focusing on the data science here. They want to help all the organizations to make decisions faster. And this company has been investing in the machine learning, data science, and so on and so forth. That's really coming out very well with this big customer win. And they're going after multiple industry verticals here. Now they're also working with the healthcare, as you can see here, and making sure that data cloud can help these big healthcare companies to make sense out of their data and accelerate clinical research. That's the way to go here. And with these type of offerings, it can really grow nicely, in multiple verticals and multiple sectors. All right, so their revenue retention rate is very nice here, 174. Anytime revenue retention rate is over 100, it's a good sign. This company is doing very well. And they got 11 new $1 million customers. That tells you they are growing their customers, high paying customer base pretty nicely here. And they got 10 customers with more than 5 million plus revenue here. That's also a great number here. And they got they also have 45 million customers. That's also a good number. That tells you this company is growing the customer base the small, medium, large, extra large customer base pretty nicely here. That's one of the reasons I like this company. Even though it's not profitable, it's growing their customer base nicely. So at this time, stock is oversold. It's a contrarian play, but I love this company mainly because it's growing popularity and there's a lot of demand for data science, and this company can do very well. So with that, thank you very much. Happy investing and trading. Please subscribe.